Hi, this is Lara at Elliott Wave Stock Market with your weekly analysis of Apple, done after market close for Tuesday 29th of July. I'm recording this video now 11 PM New York time, late in the evening, on Tuesday the 29th. I'm changing my wave count the last week's upwards movement, although the wave count does still remain valid, does it? Last week's upwards movement invalidated my last wave count, so I've taken some time to have a look at alternative explanations for what's happening with Apple. The wave count as I had it was expecting that primary wave 3 was not over. I was expecting we were going to see some stronger downwards movement, but that's not what we've seen for the last few weeks. Prices continued to move higher. I was expecting at least some upwards movement for a correction, but not as much as we've got, and upwards movement over the last week invalidated my last wave count. I'm considering now the possibility that primary wave 3 may be over, because on the weekly chart, the movement within this downwards 5-wave impulse, whether it's over here or whether it's over here, the movement within this downwards piece of movement has a stronger momentum than that seen for primary wave 1. And you can see the subdivisions within this piece of movement very clearly on the weekly chart, which is really typical of a third wave. If it was over here, it's just over $6 longer than equality with the first wave and shows a nice increase in momentum on the weekly chart. Although the problem with this wave count is it doesn't show an increase in momentum on the daily chart. I'm going to go with the higher time frame, and because we have this increase in momentum here, I'm going to accept that it's possible that primary 3 could be over for Apple, and the upwards movement of the last few weeks could be a primary degree 4th wave correction. Primary 4 may not move into primary 1 price territory. Movement above 505.75 would invalidate this wave count. If that were the case, I would move all of this. Instead of 1, 2, 3, I would see cycle wave A as a 3-wave zigzag over here. A movement above 505.75 would indicate a lot more upwards movement to come, because cycle B would need to be 90% the length of cycle wave A. I'll look at that possibility if it shows itself to be correct in coming weeks. For now, I'm expecting that because this is a second wave correction, cycle wave A is most likely to unfold as a 5-wave structure, unfolding probably as an impulse, because the most common structure for a second wave is a zigzag, which requires the A wave to subdivide as a 5. Let's have a look at this structure from the start of primary 3 up here on the daily chart, this point up here. So within primary 3 we have 1, 2, and 3. Intermediate wave 3 does see an increase in momentum beyond that seen for the first wave. 4, and a possible ending expanding diagonal for a 5th wave with a truncated 5th wave within it. The truncation may have happened in order to allow primary wave 3 to have a relationship close to equality to primary wave 1. If primary wave 4 has started here, then it's most likely so far unfolding as a double zigzag. This movement from the low to the high here subdivides best as a 3-wave structure. We have a zigzag here joining the 2 zigzags of the double labelled X, and this is where the second zigzag of the double may have begun. If primary wave 4 ends about the 0.382 Fibonacci ratio, it'll end about 467.46. I've drawn this parallel channel using Elliott's technique, with the first trend line drawn from 1 to the end of the third wave, and a parallel copy placed on the end of the second wave. The 4th wave may find resistance at the upper edge of this channel. Let's have a look at the structure of this 4th wave correction on the hourly chart, with the start of it down here is this point down here. So we have a nice 5-wave impulse up here, a flat correction for a B wave here, and another 5-wave structure complete here. This is an ABC zigzag. The first zigzag in the double is labelled intermediate wave W. A zigzag joins the first and second structures of the double, labelled intermediate X, and this may be where the second zigzag in a double begins with a 5, 3 and a 5 up still incomplete. We probably don't have the end to minor wave C, and at 476 it would reach 1.618, the length of minor wave A. Draw a channel around the second zigzag from the start of the A wave to the end of the B wave, with a copy on the end of the A wave. The lower edge of that channel so far is showing us reasonably well where downwards movement is finding support, and upwards movement may end midway or at the upper edge of that channel. Draw a big channel around this double zigzag for primary 4 from the start of intermediate W to the end of the X wave, with a parallel copy containing all of this upwards movement so far, and the upper edge of this channel may provide some resistance. If the C wave here is going to end at the upper edge of this channel, then that resistance should be broken through. Within minor wave C, minute wave 2 may not move beyond the start of 1 below 434.34. At the daily chart level, this is now my alternate wave count. This was previously my main wave count for quite a while for Apple, but all of this sideways and now upwards movement for the last several days makes this wave count look very unlikely, because the size of minor wave 2 here as a possible flat correction is hugely out of proportion to this correction 1 degree higher, and to all of the corrections within this downwards movement here. It just doesn't have the right look now. Movement above 465.75 would firmly invalidate this idea, because 2 can't move beyond the start of 1. If price doesn't move above this invalidation point and turns down and moves very strongly lower from this point on, if we see a strong increase in momentum for the next downwards wave, particularly if it makes the new low below this point, then this alternate is going to start to make some sense. At this stage though, the probability that this is correct is very low indeed. I would only take it seriously if we see a new low below this point and a strong increase in downwards momentum. I've considered various different possibilities for Apple over the last week. I'm not entirely confident with the main wave count at this stage, but it does have a higher probability than the alternate. The alternate was previously my main wave count, and upwards movement over the last week has reduced the probability of that quite significantly. It looks very strange now. I expect either way that this upwards movement is a larger degree correction, at least intermediate, if not primary degree, and I expect that that invalidation point at 505.75 is most likely correct. That's all for me today with your Apple analysis, and I hope everyone had a fantastic week.